So like to me, that's the big shift here is like there's a new generation of investors. Crypto has accelerated that by tokenizing all the world's value and making way more things on the internet investable, including memes. And so like the opportunity is to package all this new investable surface area into a single user experience. And that's the why now. All right. Welcome to Work in Progress episode 4. We're going to talk about the everything exchange idea, which is, everyone is going after. So first off, let's define what it is. Alana, do you want to take it?
Sure. I would say that the idea behind the everything exchange is that it's a single venue in which people can trade any asset that they want. So that could be a perp, it could be a crypto asset, it could be an equity, it could be a futures contract or an option. It's really the idea that you can get all of your sort of trading and investing needs in one single spot. And the exchange part of it is that there are order books that allow you to sort of move liquidity across all of these different asset classes. I was thinking about this a little bit because I would say right now we're seeing many projects, Jesse, to your point, trying to go after this idea of the everything exchange. Robinhood is trying to become the everything exchange. They recently added crypto, they bought Bitstamp. Coinbase is very much also trying to position themselves as the everything exchange. We just saw the Intercontinental Exchange invest in Polymarket, so it seems like they are trying to become at least more of an everything exchange, and they have sort of a long history of M&A as well. Hyperliquid, some are calling the everything exchange. And so I thought for this discussion, it might make sense to actually zoom out for a minute and talk about like A, how do new exchanges form or what leads to new exchanges? And then B, like what's led to market consolidation in exchanges? So basically like what creates the condition for a shift in the market structure of exchanges such that we could potentially see an everything exchange. Sort of running with that for a sec. And I'm a deep nerd on the history of exchanges, so I might ramble for a little bit. But I think traditionally there are two ways that we see new exchanges come to market and gain a lot of share. The first is when there's an entirely new asset. And so you sort of need a new exchange or a new market. And so you saw this historically with commodities, with futures contracts. We're seeing it now in crypto with crypto assets themselves, with perps, with prediction markets. We saw it most recently with Pump, where Pump was sort of the meme coin exchange and that allowed them to create and capture new market share. So the first category is like if you see sort of a new asset come to market, there's an opportunity to build a unique and tailored exchange around that asset.
Coinbase, right? Is right,
Yes.
like and Binance and all and yeah, like I think we've mentioned the more modern examples, but it's like crypto is as a whole is a new asset class and has enabled a whole bunch of new exchanges, right?
Totally. Yeah. And I would say that Binance was 2017. I believe Coinbase was well before that and was sort of the early wave of new crypto exchanges. That was some of the most modern innovation that we had seen in sort of the exchange landscape since really like the early 2000s and the 1990s. The second way that new exchanges come to market and gain a lot of market share is simply during bull markets. There are a lot more players and a lot more volume to be captured. So when the size of the pie is growing, there's an opportunity to capture some of that net new pie. And I think we've seen this to some extent in crypto, like Binance really sort of gained market share during the bull market of 2017, early 2018. We saw, for better or worse, FTX gain some market share in 2021. So when there's a bull market and there's sort of an expansionary period, that's a great opportunity to go after sort of users and volume in the exchange landscape.
I think there's one other dimension to like, new exchanges emerging, and that is like regulation. So like the ability to be a regulated exchange, like we're seeing Polymarket is about to launch in the US, right? Like that is because of forthcoming regulation or that's anticipated. I was talking with Jake yesterday, and he was saying like one of the themes in DC right now is the harmonization of policy between this SEC and the CFTC so that you can enable a single venue to trade both commodities and securities and potentially to do both in the form of tokenized assets, right? Because if they're all one token, the technology doesn't prohibit trading both, right? If they're all on chain. So I think that's another dimension is like regulatory clarity can enable new exchanges to launch and can enable existing exchanges to like support new asset classes, which makes them capable of becoming quote unquote everything exchanges.
I just want to comment your two factors. One was new asset creation. This is the one I want to focus on. So like and this kind of thing is going to bleed into the discussion about when something is an everything exchange. Like, take trading cards, right? Like, maybe let's just pretend that was a new asset class that was created tomorrow. Like, when does that fit into eBay, which is a perfectly good, well-functioning exchange? And when do you need a specified context-specific trading card exchange? Like, when is an asset net new enough that existing exchanges don't have the right context or the right experience for other reasons that it doesn't support it and you need to create the new exchange?
I would imagine that to some extent it's probably a question of sort of overlapping demand in users and the set of things that the users already on like one exchange want to trade and create. The other component of that might be sort of whether or not there's new market structure that's necessary. So the way that trading cards trade may not look similar to the way that equities trade, for instance. And so you do get sort of unique exchanges for some of these more physical goods like there's a big sneaker exchange that I'm forgetting, but you get sort of like distinct set of users, distinct set of market structure, distinct set of exchanges that emerge from that. And then the question of whether or not they can be integrated or consolidated with other exchanges largely comes down to a question, I think, of like, is there overlap in those user base and is there some sort of synergy? So that synergy could have to do with, are they all treated the same in the order books? Are they all on sort of electronic systems? Is there the desire to cross margin between different assets? Is there the sort of same derivative market structure that you might want to look for? And so I think it's not a question of like if they could exist simultaneously under one hood. It's more so a question of like, is there demand and is now the right time, or is there sort of an incentive for that? I think this actually relates to this sort of second point, which is like when you get consolidation and shifts in the market structure of exchanges, and it relates a lot to what Jesse was saying about regulation, which is that technological shifts in the way that assets are traded has historically been a catalyst for sort of reorganization of exchange market structure. So the last time that we saw a major shift in sort of the technology that underpins exchanges started in really the 1970s and then took off in the 1990s and early 2000s with the electronification of exchanges, where you went from a pit-based model with traders on the floor who were taking orders by phone call, posting it sort of on their hands, and they use hand signals. It was sort of known who the set of traders were, and it shifted to an entirely computerized system. And as a result of that computerized system, you could allow people all over the world to participate in the exchanges more easily. You could add things like after hours trading of stocks because you didn't need to manually staff the pits with a new labor force. You could have tighter bid-ask spreads, and there was sort of a whole host of additional things that you got from the electronification of exchanges. And Dan, to your point, that's when we started to see more of a consolidation of like what would make sense to put on the same ledger or put sort of in the same system, and where can you get some nice liquidity network effects or data aggregation network effects. How this relates to what we're seeing now, by the way, sort of tying it back to the point at the beginning around the everything exchange. So the last time that we saw a major shift in the landscape of exchanges was sort of a forcing function or created by electronification. We're seeing a major technological shift in the way that assets are traded and standardized and sort of denominated today, which is tokenization. And I think that blockchains, one way to think about it is sort of as like the potential clearinghouse for the everything exchange, where you could imagine that once everything is tokenized, so whether that be equities or commodities or crypto assets or prediction market contracts or you name it, like all of those should settle and clear on blockchains, and you can start to get sort of new exchange market structure around that.
One thing about following is like, so you have the blockchain is the clearinghouse, the global clearinghouse, but how does that enable an everything exchange?
If you have this global settlement layer where you can seamlessly move assets from one part of the ledger, from like stocks to more crypto native assets like Bitcoin or ETH, you can move liquidity much easier. It's sort of two things. One, you can move liquidity much easier between asset classes. And two, there's more of like a standardized notation for how you think about those assets.
I think that's fair, but I kind of have a different view on the why now opportunity. I actually don't think it's technological because like the reason being like if you use like something like interactive brokers today, it is to some degree an everything exchange. Like you can trade stocks, you can trade options, you can trade commodities, you can trade currencies all in one place, and you can cross margin all of that. So like those are all disparate systems, different exchanges. Like the technology is kind of hodgepodge, but they figured it out. I think actually the opportunity today, the why now, is actually a generational shift. It's a different cohort of users. And it's a cohort of users that started investing with crypto and are expanding to other areas. And I'm saying, you know, I'm obviously biased as a crypto native here, but you know, I do like whether they started with crypto or not, may be more debatable, but I do think it's just a different generation of investors that use different products and services. So like Robinhood, I think is a really good example of this, right? Where it's like they started with stocks and have been moving more towards crypto and now integrated prediction markets. But like fundamentally what differentiates Robinhood from interactive brokers is like a totally different user cohort, different generation of users, different user experience that's catered to that cohort, that generation. So like to me, that's the big shift here is like there's a new generation of investors. Crypto has accelerated that by tokenizing all the world's value and making way more things on the internet investable, including memes. And so like the opportunity is to package all this new investable surface area into a single user experience. And that's the why now. It's like kind of a cultural or generational shift.
I think that you can be right, but that's not mutually exclusive with Alana being right.
That's right. Yeah. And both are true. Like I agree. The technology is like makes it 10 times easier. I think why that's important is like startups can do it, right? Like it's much less costly. Like interactive brokers to get all that stuff glued together, like that's a lot of work. And
That-
now a startup can do it, you know, much more easily because it's all on chain, it's all open and permissionless. So I do agree that's a big deal, but the tech on its own is only part of the story in my view.
And this is what I wrote about in my Hourglass Markets piece. I fundamentally believe if you want, it's a necessary condition to fungibility between assets, which is what really being an everything exchange is about, if they're on the same trust layer. And if you have all these disparate things on different trust layers, sure, you can have services like interactive brokers that can do a lot of work to make that a nice, seamless experience for you. But there's a lot going on to stitching that all together. As opposed to if you just put everything on the same trust layer, as Alana puts it, the blockchain, now you get peer-to-peer access, direct access from the source of the value to the user. And you don't need to do all this finagling in order to make it a seamless experience. It is on the same trust layer. Different business logic, of course, but same trust layer.
I think that's a great point. And Jesse, just responding to your point, I guess one sort of implicit question is, do you think there can be multiple everything exchanges in that, like maybe Robinhood or sort of a net new startup is the everything exchange for Gen Z, and then you get a different everything exchange for millennials, and then maybe interactive brokers becomes the everything exchange for sort of
Boomer.
the boomers. Yeah.
Yeah, totally. I mean, I think that's already the case today, right? Like, if we're willing to say that Robinhood is like, and Coinbase are like on their way to becoming everything exchanges, then yeah, I think it's already the case. They serve a totally different cohort than interactive brokers and other kind of more legacy systems. So yeah, I do think there can be multiple winners. And I think this is like to your point about the, you know, the chain as the global settlement layer. I think that like only increases the probability that there's multiple winners because you have this open substrate that anyone can build on top of.
I think one thing that we've seen Robinhood do really well in sort of building towards this vision of the everything exchange is they've gone in one distribution. So they didn't initially own their own crypto exchange, but they routed it to other places. And then once they had enough distribution and sort of revenue and profit, they were able to go acquire Bitstamp. And we will probably see them acquire more sort of underlying exchange infrastructure. But if you unbundle the like interface and distribution layer from the actual order books and settlement, where would you start and why? If you were thinking about sort of building out a new everything exchange, would you start with building out the order book and sort of the exchange system itself? Would you start with the interface layer? How do you think about like what the right starting point would be, especially if you're a startup?
I'll start, and I want to pass it over to Jack because I honestly think what you're describing with Robinhood, which is basically the Web 2 version of using a partnership to aggregate demand and then eventually vertically integrate with an acquisition. I think that's on superpowers with crypto. And Jack and I wrote about this in a piece called Fractal Protocols, which is basically like what I think you should do is you should piggyback on open supply of different exchanges that are already existing in crypto. You should use the superpower of crypto, which is open supply, build great products and experiences on top of that, And then once you have that great product experience, then you can vertically integrate and offer line by line each new area you want to expand. You can start with a niche thing and continue to use open supply of crypto to go next, horizontally expand through verticals. And in that way, you can build an everything exchange. But I'll pass it over to Jim.
Yeah, I think that's about right. And Alana, that's essentially what you said Robinhood did with them, like kind of routing the flow of crypto and then eventually vertically integrating, acquiring their own exchange. Like these types of like business strategies are even easier on blockchain rails when you can kind of pick one vertical because its supply is open and then just like pick another one and go from there. And I mean, the question of where to start is hard to answer, but like you probably want to start with some sort of neglected consumer segment or behavior and wedge your way into increasingly larger markets. And that's like obviously extremely broad, but you know.
I think the key thing is that aggregating demand is the superpower. Like it is the thing that you should be focusing on. And then in crypto, it's just so trivial to offer horizontal other services and then vertically integrate, capture more of the value.
I would say one of the sort of underrated players in the everything exchange category today, and Jesse, I know you've thought a lot about this, is Phantom, which we saw them sort of start off with Solana trading, and then they've expanded to other chains, but they also added perps, and they own a lot of user distribution. So Jesse, I'm curious if you have thoughts on like, what about the interfaces that don't yet own any exchange infrastructure? Do you think they're like players in the category of the everything exchange, or how do you think that may evolve?
Yeah, for sure. I mean, I think you could look at Phantom and also, Phantom like owns that user relationship and is the front door to crypto. Like that's, so they didn't start with Solana trading. They started as a Solana wallet. And then the thing that people want to do on Solana is trading. And so they made that really easy in the wallet. And then they, as you said, they expanded to perps. Yeah, I think Robinhood doesn't own any exchange infrastructure either, right? They are just an interface to third-party exchanges. Interactive brokers, same thing. So like, I think this structure mirrors kind of the status quo where the infrastructure is typically independent from like the end user interface. And wallets like Phantom, I think, are in a very privileged position to take a shot on goal here because they have the relationship with the end user and access to that user's identity, their money in the wallet, and all the data that they're generating across applications. So that I think is a very privileged spot to be in.
I just want to say on the record, because we said this yesterday, like I'm actually, I think of the entire team, the most bearish everything exchange. The reason is because like I recognize that when you zoom out and think that everything that we're talking about is speculation, trading, right? It's making money, that it is pretty easy to see how, I don't know, a perps exchange could be entirely fungible experience from, a DEX. Okay, so okay, I recognize that. But I have extreme concerns about context fracturing. Like it sounds nice in theory to say like a perps exchange is identical to an AMM, but what type of specific context is actually required to make a perps exchange a good experience? And does that actually transfer and make sense in terms of a user in just an AMM product, as an example? Another way we see this is with social. Very popular right now to try and integrate social into trading. But social to me has entirely different context. For it to work, I think you need to think that it's the thing you want is not like to communicate with friends, it's to see how your friends are making money, right? So like I'm like bloat of features, I think really hurts product experiences. And I'm not yet convinced that an everything exchange actually makes sense when you actually look at the practical user experience as opposed to like the theory of just trying to make money.
I would push back because I think that I'm gonna lean on the cultural analysis here again. I think what's happening culturally is that the world is just becoming more degen. What I mean by that is like more positive spin maybe is the world is becoming more financially literate and more interested in investing because essentially investing or in some, call it gambling if you like, is increasingly rational relative to other ways to make money. And so if you pull on that thread and believe the world is getting more degen, it follows that people are going to want to trade more things. They're going to learn how to do it. They're going to want the convenience of doing it in one place. And I do think like, crypto has already exemplified this trend, like, people getting interested in crypto, learning, financial literacy, investing through crypto, going further out on the risk spectrum, trading perps, trading meme coins, trading stocks on Robinhood, with zero day options and things like that. I think it's all one job to be done, which, as you point out, is make money. Like what we've seen historically in crypto is like people are willing to jump through all kinds of hoops and learn new behaviors, new skills in order to make money. So the app has one job, which is like give users access to investing, democratize access to investing, and then you can slot in a number of different ways to do that. Probably not infinity ways, but like more than one. And the benefit to the user is convenience of doing it all in one place, doing it all with like one account balance and cross margin. So I'm bullish on it for that reason. I think it like fits the cultural milieu that we're in.
Okay, so then why hasn't it worked in the Web 2 context in the US to date? Like so many different companies have tried to use, for example, chat or social media, Facebook, right? You can give one example I gave up in discussion forum, which was Branch Out versus LinkedIn, right? Branch Out was trying to use trying to use the Facebook social network to build out basically a competitor to LinkedIn, and it didn't work out. Like you could say the same thing right there. You could say, okay, this generation.
You mean about social specifically, like social trading specifically, or everything exchange generally?
Just like you're positing that everything exchanges are going to work, at least when you use the term exchange, you mean like a speculative everything exchange. So like you're positing, I think, like, okay, like if you want to trade meme coins and you want to trade perps, you want to trade everything, that makes sense in one consolidated experience because everything, the common denominator is wanting to make a lot of money. That makes sense. I get that. I have concerns about the UX bloat, but I get that. But then what I'm trying to figure out is like, we have other examples, not in trading, but like being social, right? Is another example where we've tried this many times. You could easily say like connecting with people is the common denominator of Facebook. So therefore, like a LinkedIn competitor, which is about connecting with people, should also work on Facebook.
I think that analogy is very different because I think in social, like you have different graphs for different jobs to be done. So the LinkedIn graph has a different job to be done than the Facebook graph, than the Instagram graph, than the Twitter graph. Whereas I think in trading, there's just one job to be done. So to me, that's why the analogy to social isn't useful here. Is like it's just one job, is make money and learn how to trade different products. And again, like I think there's a cultural tailwind to people wanting to do that, to learn new things. So, but then like I do think it's an interesting point on social specifically, like where does social fit into the everything exchange, or does it? I think that's an open question, and there's lots of projects that would say the answer is yes. Like you should, in fact, like you should start social first. And like one that I like using is FOMO. And I think what's interesting about that is FOMO is kind of bootstrapped off of an existing social network, which is crypto Twitter. And I think crypto Twitter is in fact like it's a subset of the Twitter network. Twitter is this kind of information graph or interest graph, you could say, and then crypto Twitter is the subset of people that are interested in making money. The biggest accounts on crypto Twitter are not thoughtful VCs or even thoughtful founders like us. They're traders, and so like people are following crypto Twitter accounts based on like trading alpha. And there's some folks who believe that graph can become its own separate app. And you can build the everything exchange social first.
By that theory, then X offering crypto trading would be an absolute killer feature.
And they at one point, I think they got pretty close to considering it. I wouldn't be surprised if they go back. There was the Polymarket X partnership announcement. I don't know where that's at, but like you could imagine them getting into it. That said, I think it's unlikely they'll be able to move at the speed that a startup will, and so I do think that's a really exciting startup opportunity, is social first, like wedge into the everything exchange idea.
So just to sort of sum it all up, seems like in terms of the question of whether or not an everything exchange will exist, there's some pretty good why nows, which Jesse, to your point, there's sort of a cultural and societal shift around the way that people think about investing in the set of participants that are almost like existing in the investment category. There's a technological shift. There's a regulatory shift. So there's a number of good why nows. And then as we think about who is well positioned to build an everything exchange, and specifically from the startup point of view, it sounds like where we've landed is that try and aggregate distribution first, aggregate a set of users, get the demand side, and then use sort of the more open supply sides of assets, plug into third parties, and over time try and vertically integrate. The sort of one caveat is if you do want to build an exchange, the way to do it almost always that's found historical success is find a new asset that likely has large tailwinds behind it and try and build for that unique market structure and piggyback off of that in order to build the new exchange. But if you're sort of a net new startup going after the everything exchange, start by just making customers as happy as possible and winning sort of the user front first.
100%.